Hello friends, welcome to your own channel Noiseless Investment. Here we try to decode a company based on the fundamentals and get to know if the company is worth our investment or not. So I'm not a SEBI registered advisor and these are my personal views based on the fundamentals of the stock. So please consult your financial advisor before investing in any of the stock and do your due diligence as well. Today we are going to do the fundamental analysis on Grasim. So here is the website of Grasim. You can go through this and get to know more information about this company. So now let's move on to the fundamental analysis. And here we see that for the current market price of Grasim is 1716 and it fell by 1.95% on 23rd of June. So, and the current market cap of this company is 1,12,994 crores. The stock PE is 16.4 and the industry PE is 13. So the stock is a bit expensive in comparison to the industry. If we look into the ROCE, it is 12.6 for this year. Average ROCE for 3 years is 11.9. Average ROCE for 5 years is 5. For 5 years is 11.3 and for 10 years it's 11.6. So the company is maintaining a consistent ROCE of 11.6 till 12.6%, so which is less. Now if we look into the ROE, then it ranges between the average ROE ranges from 8.9 to 9% around, which is also less. Now if we look into the debt on the company, then the debt is 1.31. So the company is having a huge debt on itself. The face value for this stock is 2 and the dividend yield is 0.29, which is less than 1. If we look into the current ratio, it is 0.9, which is not sufficient. If we look into the promoters holding, it is also not good. It is less than 50%. The FII's holding is 12.4 and they have reduced their stake by 0.13%. The DIS, they have increased their stake by 0.34 and their holding is 16.8 as of now. So the company, the pledged percentage, they don't have, the promoters have not placed any of the shares, which is a good thing. The sales growth is 22.9% and the profit growth is minus 9.5, which is not good. So CAGR, compounded annual growth returns for this stock is for profit growth is minus 9.5, which is not good. And if we look into the quarterly profit growth, it's minus 46.1%. If we look into the average profit growth for 3 years, it is 10.7 and for 5 years it is 19.4. Similarly, for the sales growth for 5 years, it is 16% and the sales growth for 3 years is 19.9%. The operating profit margin is 18.4%. The EPS is 104. So each stock of the Grasim is making 104 rupees for you in an year. Now, if we look into the dividend payout, it is 9.64, which is less. Now, if we look into the PEG ratio, it is 0.85. So the company has fair chances of growth in the future. If we look into ROIC, then it is 12.3%. So whatever return you are getting on your investment is 12.3. The Altman Z score is 1.53, which is extremely bad, which is not good. The Piotrowski score is 3, which represents the finances are also not good for this company. If we look into the return over 1 month, then it is 0.87. The return over 1 week is minus 3.63 and the return over 1 day is minus 1.95. It is away from the 52 weeks low by 31.5 and it is away down from the 52 weeks high by 6.71%. Now let's look into the inventory days for this company. So the inventory days, that has reduced from 200 to 180, but it is lesser, but it is more than the average inventory days of March 2021. For March 2023, it is 180 days. Now, if we look into the cash flow for this company, so from the operating cash flow from operating activities, it is minus 12,685, which is not good. The company is not creating any cash flows from the operating activities, so which is exactly the main business of this company. Now if we look into the cash flow from the financing activities, that is 26,469, and that is why you can see the cash flow as positive here. So now let's move on to the beta for the stock and get to know what exactly is the beta. So if we look into the beta, then it is coming out to 0.9, so it moves in alignment with the market. And if we look into the stock score, it is 9 out of 10. So the stock is a much desirable stock with good fundamentals. However, let's look into the earning. So earning is 7, fundamentals is 6, relative valuation is 8, risk is 10, and price momentum is 4. So this overall stock score is 9. Now let's move on to the chart structure for Grasim. Then we can see for Grasim there was a big red candle that was formed, and the volume was less in comparison to the normal days. You see the shadow, so it is lesser than the normal days volume. So what is happening is the retail investors, they are selling off their shares stock. The weak hands, they are moving away from this. And if we look into it is finding the support at this level of 1716. If it will fall from this level, then the fair chances are that the stock will fall till 1658 as well. Prior to that, the stock may find support at this level of 1669, and thereafter it may, if it will not find any support, then it has the potential to move till 1547 as well. So however, this is a big demand zone for this company, this range. And if we look into the RSI, so RSI is 44.8, and we see that the MACD line has moved below the red lines, which is not a good sign for this company. Now let's move on to the fair values of Grasim is coming out to be 1676, and there is a potential downside of minus 2.3%. The uncertainty is low, however the spread can be between 925 and 2055. These are the pros and cons of this company. So you can go through this and get to know more about it. Thank you for watching. Have a nice day, and please like and subscribe to my channel in case you like this video, and click on the bell icon to get the regular updates, the useful informations on a regular basis. Thank you. Have a nice day.